Okay, thank you everybody for joining us today. My name is Ridge Howell, and I'm legal counsel for Native Agriculture Financial Services. Today's another series in our third Thursday webinar series. And we are really lucky because we've got Jamie Cortez. He's going to be talking to us today about crop insurance as a critical risk management tool. Jamie brings over 4 years of insurance experience and is licensed in 20 plus states. And he was also the 2024 NCIS Outstanding Award recipient for work in Indian country. We'll reserve some time at the end for any questions, but you can also put them in the chat and we will be monitoring them as the presentation goes forward. But otherwise, I'll go ahead and turn it over to you, Jamie, to start talking to us about crop insurance.
Awesome. Thank you, Ridge. All right, just making sure. Can you see that okay?
It is, yep, it's up on the screen now.
Okay, perfect. Well, thank you again for giving me this opportunity to speak and share some information on crop insurance. This will be kind of more of an update, things to consider, some recommendations, and some potential crop plans that might benefit you wherever you're at, wherever your operation is. Um, Let me go to the next slide here. All right. So I gotta have to throw this disclaimer in there, right? So the information that we share today is based on today's information, today's rates, right? As things change, plans change, programs change, right? This can change. So just want to make sure there's a disclaimer in there. So you always want to refer to risk management agencies, actuarial documents, and to make sure that that's up to date for wherever you're at, wherever you're farming. A little bit about me. I've been in the insurance business for about 4.5 years. I currently live in Moxie, Washington. Moxie, Washington is known for its hops production. We It said we grow about 60 to 70% of the world's hops in Moxie. We're just right outside of Yakima, Washington. Very large agricultural community, and so it's beautiful to see come harvest time. You can see so many different diverse crops, tree fruit, row crops, wheat, corn. It's very, very diverse and beautiful to see. I am licensed in 20 states, over 20 states, as Ridge mentioned. I'm a former educator, so I try to bring that background uh, to conversations, to discussions, meeting with clients and prospects. So I spent about 13 years in education, about half of that in high school, and then the other half in higher education. So at a small college, university in Toppenish, Washington, so on the Yakima Reservation, kind of south central Washington. Um, I like to say, I love to say that I'm a Intertribal Ag Council ally, Southwest Indian Ag Association ally, and Indian Nations Conservation Association ally. So I've been to those conferences, organizations, meetings, just listening. I've been asked to speak a few times at those organizations and share information about crop insurance. Um, and just again listen, see what we can do to help our farmers, our ranchers, our native enterprises to ensure that they are, um, um, you know, managing their risk, but also, farming the next year because it is, as you'll see in this presentation, and as you know, um, there's a lot going on in agriculture, and it's getting more and more challenging, right? So we need to protect that. Um, I was the recipient of the 2024 National Crop Insurance Services Outstanding Outreach Award, and that was um, the majority of that was because of my work with Indian country, and it's near and dear to me, and I take that um, very proud of that, and um, I love the relationships and the the meetings, the organizations, the culture, all of it. It's beautiful, and so that's just near and dear to me. So I'm very proud of that award. Um, and then I do mention, I want to mention that I am appointed with 6 different approved insurance providers, right? There are 13 approved insurance providers that underwrite crop insurance in the country. There used to be over 70, right? But now there are only 13. And so we are appointed with 6 of those: RCIS, Rain and Hail, NAU, Great American, ProAg, and AgriSampo. Um, so great partnerships there. Um, my goals for this webinar, and I mentioned earlier, right, is why you should consider crop insurance, because some of you might be on the fence. Some of you have heard, maybe your neighbor has used it and it's worked for them or it didn't work for them, but you might be on the fence. So why you should consider crop insurance. Share any recommendations that would set you up for success for the future and during the process, the crop year, and during the claims process, because that's the ultimate goal is to get you paid in a timely manner if there's a claim. And then I do want to show you loss ratios and historical coverage, because those tell a story. They paint a picture. It tells you what crop insurance is doing and what it's intended to do. And so love to share those stories. And then lastly, crop plans that you should consider for your operation um, coming forward or moving forward, right? Some plans that have higher loss ratios. And again, it's just proving that they are working for you. So, um, first goal, right? Why you should consider crop insurance. Well, um, as I was thinking about this presentation, I was trying to come up with some information, right? And we're always getting news articles, and morning ad clips is one that I get every morning. And so, there are a lot of groups out there that are sounding alarm about farmers' future. Um, it's getting more and more challenging. The average age of the farmer is getting up there, and their children, aren't wanting to take on the farm. And so there's so many things that are happening within agriculture that's getting more and more difficult. And so these groups are sounding the alarm and trying to get help, trying to get support to ensure that they can farm the next year, or for future generations. Input costs, right? We know the input costs are skyrocketing. They're getting more and more difficult. Um, Input costs are one of the biggest expenses for farmers, and so it's how do we combat that, and that eats into their profits and their revenues, and so again, how do we help with all of these things to ensure that farmers are growing and succeeding. Um, U.S. farm bankruptcies. This was, I think, yeah, I got this last week. Increased 46% from 2025, or in 2025 from the previous year. So more and more farms are going out of business because it is getting difficult. It is getting expensive, and so they just can't do it anymore. So how do we protect that? And then farm loan, the size has also increased in 2025. So equipment, property, you know, things are getting more and more expensive. If I want to grow, right, I might have to go get a loan. And so what does that mean? Insurance or interest rates are going up too. And so it's getting, again, challenging financially. It's difficult. And so um, we got to help. We got to figure out solutions for our farmers to keep farming, because they do feed not only their communities, the country, and the world. So having solutions for them is critical. And and if you want to grow, right, and you go get a loan, right, some of those farmers, some of those lenders will require some sort of insurance, right? So we'll talk about that as well. Why purchase crop insurance? As I was thinking about this, right? Well, you're trying to protect your operation from unknown, right? Trying to protect it from weather, trying to protect it from, people. And because you want to can keep farming, that's what you're good at. So how do we do that? We gotta figure out, have a team, have other folks step in and help you protect that. And one of the ways is through insurance, um, crop insurance that helps reduce your risk, right? Because everything that we do is a risk. You're a business owner, you run a farm, an operation, everything that you do is a risk. So through insurance, we reduce that. Another reason to purchase crop insurance is there are subsidy benefits. So the government, it's a private-public partnership, um, and so the government helps out and with subsidies, and they give some assistance so that you can participate in crop insurance to keep farming, um, not only for your livelihood, but again to feed the world. Um, Through disaster payments, right? We've had SDRP phase one, um, and recently FBA, Farmer Bridge Assistance Program, and there are a couple of others that are just recently announced, right? So through programs, through the FSA office, right? And if you have crop insurance, well, those farmers who participate in crop insurance, they also get maybe first of the line and additional payments. And so it's just beneficial to participate in that. Um, Loss ratios, I mentioned that one of the goals. They do tell a story. They paint a picture, right? It's proof of concept. It is working. It's designed to put money back into the farmer's pocket so they can keep farming and keep their businesses in operation. So those loss ratios do tell a story. And you might want to purchase crop insurance or might have to because a lender is requiring you to do that. And so uh, if you do go get a loan, right, and they're requiring that, well, so they'll request some sort of summary of insurance or summary of coverage to show what, if there's an indemnity, what your guarantee may be, things like that. So they're protecting their investment as well. Um, Excuse me. So, mentioned earlier, some of the disaster programs. So the Farmer Bridge Assistance Program um, was announced a few weeks ago, and it's USDA is targeting February 28th. So next week, they're targeting to begin issuing payments. And this is for the commodities. And you can see here on the screen. Um, I'm not going to name all of them, but you can see, and they're in alphabetical order here from barley all the way down to wheat, those major commodities, and the amount of your payment's going to be per acre. And so that's going to be a huge assistance to those farmers who are growing those crops, those commodities. Another one that was announced last week is the specialty crops. So assistance for specialty crops farmers report. Or so the deadline for this is March 13th. So you want to contact your local FSA office if you are a specialty crops grower. And here I took a screenshot of all of those specialty crops that are identified in the on the website. Again, you can find this on the FSA website. So these are in alphabetical order from A to W again. So again, this is for specialty crops growers. So I think the administration is giving out $1 billion for that, which again, much needed because there aren't a lot of options for specialty crops growers, and so this is a much needed help for them. Um, Subsidies, mentioned that earlier. So there are some subsidy changes, some increases in subsidies, which is much needed. And anytime they increase that subsidy, right, it gives the farmer um, another opportunity to either buy up, so get a higher coverage level, or just save some money. If they're comfortable with the coverage level they've had with an increased subsidy, it's going to help save them some money. Or maybe they wanted to increase their coverage level, but they just financially couldn't. So now with the um, increased subsidies, maybe they're able to go up to that next level, which is beneficial. And whole farm revenue, now we can go up to 90% coverage level and, excuse me, go up to 90% coverage level, and those you can see the subsidy factors there. So we kind of find the sweet spot for whole farm is about that 75% because the government will still pay 80% of your premium at that level. And then if you're able to go up higher, even better. Next, additional subsidies for beginner farmer rancher or veteran farmer rancher. So before on the left, you can see what it was prior to the one big beautiful bill updates. You used to only get 5 years. Now we can go 10 years. And so starting with your first year, if it's your first year farming, you can get 15% additional subsidy, right? So let's just say you have a PRF policy, and the maximum, subsidy there might be 59%. And so if you had, it's your first year and you're farming, so add on another 15% subsidy there. So you're looking at, 74%, where the government is paying your premium. So that's huge. That's significant. And it starts to taper off after starting year three. And then from years 5 through 10, you still get 10% additional subsidy. So again, more and more reason to um, uh, for newer producers to get involved because it's hard to get started, right? It's very difficult to get started, and so we want to make sure the government wants to make sure that we're helping those new beginning farmers and veteran farmer ranchers, um, um, helping them get off to on the right foot. So those are much needed. So what you're trying to do is you're trying to protect your livelihood, right? As we talk as a crop agent, we're talking to farmers, and they say, I just want to protect my yields, right? Some want to protect revenue. Some want to protect both. Some might say, well, I'm irrigated, right? So I don't have anything to worry about. Well, what happens if that irrigation supply fails for some reason, right? It's got to be tied to a weather related event, so such as drought, right? So up here um, in Washington, right, we've been affected by drought just like everybody else has. And so, if they were expecting, 100% of their water allocation for that year, but then they get told well, you're actually only going to get 75% or 65%, after they planted. Well, were you preparing for that? So even though you're irrigated, you still may want to consider crop insurance because you never know, especially with the way the weather's been performing, and it's very unpredictable. We like to say that Mother Nature is undefeated. Some say, well, my yields are fine, but my price is down. Okay, well, how do we protect that? Well, maybe it's through revenue protection, maybe it's whole farm revenue. Um, Drought and weather are destroying your yields, right? So hail is an issue. That's a peril, right? Frost, freeze, maybe heat. Talked about drought, right? So you're protecting your livelihood from these natural weather related events. Um, you know, More and more recently, we're um, just run into a lot more forage producers, hay crop operations they're looking for solutions for excessive rain, right? They have a great crop, yields are great, but rain comes and destroys their crop. So now the quality is lower, and so they have to sell their hay at a lower quality. And so that wasn't expected. And what do we do for that, right? So if we can come up with solutions, right, which there are solutions, you know, it's our job to present those to the farmers, the ranchers, the operators, and see if it makes sense for their operation. Um, I'm going to jump into goal two here. So recommendations for success. Ridge, I can't see the chat. So are there any questions in the chat? Maybe I can take this a quick second to pause and see if there are any questions.
We don't have any right now.
Okay,
So if anybody wants to put them in there, y'all feel free to do that.
perfect. Thank you. Okay, so here are my recommendations. Um, I went a little faster. Yeah, sorry. You want to be prepared to answer lots of questions, right? The the more that we can understand your operation, because every operation is different. You might be planting the same, you know, crop as your neighbor, but the way you operate might be different. The soil might be different. You might be a few miles down the road, right? So weather patterns can be different. Um, you might be irrigated, they might not be irrigated. And so things are different. Even though you farm similar crops, they could still be different. So there are a lot of questions that we want to ask, and you should be prepared to answer because that helps us, the crop agent, to tailor your crop plan or give you the best solutions, right, for the best options for you and for your operation because we want you to be protected and we don't want you to buy more insurance than you have to. And we also don't want you to buy not enough insurance because then you're basically going to be paying for nothing. You might never trigger a claim. And so we want to put you in the right spot. So having these questions answered is very, very critical. Um, do you have production records? It's important to have your production stored somewhere in an organized manner because it just helps everybody. It helps you, it helps your crop agent, it helps FSA office, and it helps during that claims process. It speeds things up. So having those production records is vital and organized is extremely vital. What's your soil like? What's the weather like in your area? Um, because it could change. It could vary, right? One field, if you're of a fairly large operation, one area might, you know, uh, the weather might be great and soil's great, but in another area, it's a little bit different. So we want to make sure that we understand how that works for you. Um, do you own the land? Do you lease the land? Do you have a share agreement with somebody? Do you report your acres and your production to FSA? Because that's helpful, right? If you already have that, if you're already utilizing the FSA office, it's very, very helpful for us and for you for future. As I mentioned earlier, right? These disaster payments, if you're utilizing the FSA office, um, it just speeds things up for you too. So, how long have you been farming, right? Because that's going to tell us, do you qualify for additional subsidies like the beginner farmer rancher? Are you a veteran, right? Additional subsidies, right? All those things, um, they can help with your operation. And have you received any disaster payments recently, right? With SDRP1 or, is it Farmer Bridge, right? If you're going to be receiving some of those payments, because if you are, especially with SDRP, Supplemental Disaster Relief Program, then you're required to purchase crop insurance at a buy-up level for the next 2 years. So those questions help us to understand your operation a little bit more. And there are lots more questions, many more questions. And so I think the more answers we have, the better, again, just to tailor your crop insurance to your needs. Record keeping. I mentioned this, in the last slide. Keep accurate records. Um, it helps build your APH. APH stands for actual production history. So if you keep records, it can help build your actual production history, your database. And so if and when there's a claim, right, during the claim process, we can have all of that information to be able to provide the claims adjuster to get things sped up for you. Because again, the goal is to get you paid if and when there's a claim. That's the goal. And get you exactly what you're expecting to get paid, right? So if we don't have those accurate records, it can slow things down and maybe there's a penalty, maybe, maybe they decrease your indemnity that's owed to you. An indemnity is a payment, right? That's what you are going to receive from crop insurance claim. So again, we want to make sure that you have those accurate records to get you paid. Um, Third party records, right? So if you sell your crops to somebody, to a third party, just keep track of those scale tickets, any slips, any receipts. Um, you know, Having a good relationship with them to be able to get that information is critical. Again, during claims time, and then while we set up your policy, or when your crop agent sets up your policy, they're going to need some of that information too. So, um, you want to stay organized because that helps during the claims process and just speeds things up. Production and yield history. Um, you want at least 4 years minimum, and I say per field here, uh, because you want to know exactly what's coming off of this field. If I've got, 10 different fields, 20 different fields, 100 different fields, I want to know exactly what's coming off of each of those fields, even though, your unit structure might be different, like enterprise units, basic units, or optional units. We want to know exactly what's coming off of that field just to ensure that we've got everything right for you. So at least 4 years minimum is what we want, right, per field, so that we can set up that database, that APH database for you with your yields. Work with your local FSA office to report your acres, establish your history, to get you maps, your legal description, so farm tract field numbers or section township range. They'll help with all of that, and then those programs that are beneficial for our farmers. FSA has been, um, a key partner for sure, and so please utilize them. And I will say that you know we got to have some grace there too. And I'm saying this for our local FSA office and probably your local FSA office. Um, you know, they're swamped. They've got a lot going on, and so um, just continue to communicate at a high level and work with them as best you can. Um, but I think everybody's trying to do their best, right? They get new information. They're trying to decipher it and figure it out, and so are we. Um, and so we just got to work together, work together as best we can. What happens if I'm a new farmer and I've got 3 years or less history? Well, that's okay. We can use temporary yields, right? Or if you are a new farmer and you bought the land from a previous farmer, or you're leasing the land from a farmer or a previous farmer, right? So we can, or you can ask them to use their yields, right? Their previous yield history, and that can work, right? So if you don't have 3 years, or if you have 3 years or less, that's okay. There are some things that we can do to help with that. Um, but again, talking with your crop agent to figure that out for you is important. Some additional recommendations, and this I'm putting my not only my crop insurance lens on, but my property and casualty insurance lens on. Um, so your business insurance, right? Your homes, your autos, your farming equipment, um, all those things, livestock, right? Putting that on that hat on. So if you can create your own farming or business entity, that's just going to separate your personal from your farming, right? So if anything happens, if everything's together and something happens, and let's just say you get sued or you're held liable for something, they're going to come after you personally, and you don't want to be in that situation. But if you can keep your business separate, your farming separate from your personal, well, then they go after the farm or the business if that's who's held liable, right? So they can't come after your personal belongings. So that's a recommendation: is if you can create or separate those, that's gonna benefit you in the long run because it protects your personal assets from any farm or business liability. Um, get insurance for your farm, your property, your equipment, any autos and liability. I know that insurance is expensive. I know that insurance keeps going up. It goes up for me too. I don't like paying extra, even though I've had no losses. But I haven't had any losses, but insurance goes up, and it's because what happens around the world, right? It affects these insurance companies. And so it gets trickled down to me. It gets trickled down to you where I have to increase my payments, my premiums because it's a law of numbers. We're paying for this pool of money, insurance, right, to pay for claims. And so um, I know it's expensive, but it does help um, when disaster strikes, right? There's some bad days and then there's some really bad days, and you want to be protected for those really bad days. So if you can um, get some insurance for that equipment, for your property, if something goes down, your autos, um, it's beneficial for you. Consult with an accountant familiar with any country tax law. Super critical. Last month, I was in uh, at a conference and listening to somebody uh, who is familiar with Indian country tax law, and she was phenomenal. Um, good information, and I think that'll be beneficial for you. Um, IRS form Schedule F. So you have a farming operation, and so you may or may not be required to file federal taxes, but if you wanted to utilize some of these programs like a whole farm revenue protection um, policy, then you may be required to submit a Schedule F or a substitute Schedule F. So utilizing um, accountants to help with that. And it's got to be a third party. If you have a whole farm revenue protection policy, it has to be a third party to help set up those um, to help set up your entities, and you need to submit a Schedule F or a substitute Schedule F, and so they can help with that. It's critical. Um, these are some, again, setting you up for success. So if you do have crop insurance, or if you're considering crop insurance, important dates to be aware of. It's not just signing the policy and then I'm done, right? And then I report my acres later on, or report my production, and then if I'm claimed, then I'm going to get paid. It's a lot more involved than that. Um, and this varies. So that first, bullet, if you will, it can vary by crop, by state and county. So you want to check with your crop agent. We look at the RMA website. We use the actuarial documents daily, right, to ensure that we are giving you the right information. So it does vary by crop, by state, and by county. So there are various dates throughout the year for crop insurance, and I just pulled this up. This is for corn in New Mexico, right? Specific county in New Mexico. And so there's a sales closing date, right? And that's where we have to submit the application by. Just get the intent, signature date, the intent. And then you've got your cancellation date is the same day, right? So that for the year prior. So if you didn't want to have crop insurance again, you can submit a cancellation form. Um, if you wanted to. It's a continuous policy, so you don't necessarily have to. You can just report 0 acres and then move on. But there's a cancellation date, earliest planting date, right? So we got to follow these dates. And again, come claim time, or something happens and adjuster asks you, well, when did you plant? Well, I planted before this 416. Well, it's not insurable, right? So you have to make sure we follow these dates. Final planting date, right? So if there's a prevent plant option, well, there's a final planting date. So if it's after that date for some reason, right, we got to be in communication with the adjuster. But if it's after that date, might not be insurable. So end of late planting period, there's acres reporting, right? So, which is further down the road from your sales closing date. So, because um, you're not going to plant on the date you sign, or the sales closing date, you're going to plant later on. So, got to make sure that we have that acreage reporting, because we have to report to the approved insurance provider on that date or before that date. Um, Premium billing, as you may or may not be aware of. Crop insurance, you get billed later, and so you don't have to pay up front. right? So the government, they want you to produce a crop. They want you to make some money, and that's first and foremost. So your premiums are not due until later. So again, premium billing date is usually that August 15th for spring crops. Um, and in the insurance state, so after that date, I think there's a 12, it's kind of small here, 12/18, 12/10, excuse me. After that, so that's when insurance ends for that specific crop in that crop year. Um, Termination date, you can see that. That's the same as that cancellation date, right? It's for the next year. Contract change date, that's for us. Um, and you to communicate that to you, the farmer. Um, so that's when RMA has to submit their rates and any contract changes by that date. They got to submit that. Excuse me. And then there's production reporting. So again, later on down the road, um, lots of dates to consider, and so that helps you um, be prepared, helps you to be proactive in understanding your specific crop. All right, excuse me. So third goal is what I love to to dive into and geek out on, um, and look at loss ratios and historical coverage, right? So if we can see what it has done or how that crop program has performed in your area, then it just again it tells a story and it paints a picture. Is it working? Are people utilizing that program? And if so, if they are utilizing it, well, how is it performing? And so we can look back at most of the plans and see what that looks like. What I have here is this was pulled about a week ago. This is, yeah, excuse me, as of February 9th. This is Federal Crop Insurance's summary of business, right? This is a report that we like to look at regularly to see kind of where we're at. Um, to the far right, you can see the crop year to date. And so this was as of February 9th. And I will say, I have a couple of bullets down here. So the net acre and the dollars are in thousands. Okay. So for example, the policies with premium um, so far are to date, right, 2026, and we are February 19th. Um, Total policies are 254,000, right? Um, but the net acres insured, it says it's 349,516. Well, that's actually uh, uh, million, right? 349 million acres that are insured right now. And then the and um, total liability that is insured right now is 56 billion, not 56 million, right? Because those are in thousands. So a lot of acres are being insured. There's a lot of liability out there. More and more farmers are participating in crop insurance because they are taking advantage of the subsidies, taking advantage of what's out there, because these are painting a picture. And you may look at, well, the loss ratio is 0.02 or 2%, right? Well, um, last year, 2025, at this time, it was 6%. So it's a little lower, right? This is the start of the crop year. Actually, it's about halfway through. Crop year begins in July 1 of so we started the 2026 crop year in July of 2025, believe it or not. So you can start getting some of those policies way in advance, right? So, um, but last year we're about 6%. Last uh, crop year, so 2025, it ended about 40, uh, crop year to date was 49%, right? So we can see that, and this loss ratio right here is the indemnity that's received, right? Payments that the farmers are receiving, and they just divide that by the total premium. So what I'm going to show you is farmer paid loss ratio is going to be higher than that because these programs are subsidized, right? So you take the total premium and you subtract the subsidy, and that's what the farmer's actually paying. So we want to look at that. What is a farmer pay loss ratio is what we want to look at. What I did was I took a few states, a snapshot of um, crop insurance for that particular state. Um, and this is what pulled up for New Mexico. And so if you're thinking, I don't know if we have any producers in New Mexico on the call, but if you're thinking about, growing a crop, or if you have a crop, I mean, this is very helpful to see, how many acres are insured, what percent of those acres are insured in that state, um, um, and kind of what's working, what's not working. This will help paint a picture for you. Or if you're thinking about growing that, well, hey, there are several acres that are being planted or grown in that area, so maybe I should consider that. Or I don't see mine on here, so I don't know. Maybe that's not a good idea, right? So this can help with that, and this includes crop pilot programs, right? Such as apiculture or PRF. Looks like there's some hemp down in some counties in New Mexico. Whole farm revenue protection is a pilot program too, and then there's your livestock kind of down at the bottom. LRP, some nurseries, field grain container, and then some hybrid sorghum seeds. So those are dollar liability programs. Oklahoma, if we have any Oklahoma producers on the call. Again, just looking at, does it make sense for me to grow a crop, or am I growing this crop, but am I not insuring it? And, you know, should I insure it? These are all good questions to ask. And if we can look at the data, it will help us to determine if we're thinking about the right thing or doing the right thing here. And then, of course, talking with your crop agent wherever you're at. It's extremely important. Here's a look at Texas. And you can see that when you look at the insured acres and total acres, some of the insured acres are actually where are we at here? So like the citrus fruit, insured acres, you have 8,800 acres, but total acres are NA, right? So you're going to see in some states, right, some places where the insured acres are greater than the total acres there. And so it could be that they don't report their acres to FSA. And you don't necessarily have to, but it is helpful to report your acres to FSA because there's a lot of benefits to that. But sometimes farmers don't. So they don't like to use some government uh, programs, and so they don't utilize that. But it is helpful to do that. So that's why you're going to see the NA insured acres are greater than the total acres there. 15-year crop history in Texas. Again, I don't know if there are any producers in Texas, but from 2009 to 2023, the far right, you can see the loss ratio. So anytime there's a loss ratio of 100% or higher, that means that the farmer, the rancher, the producer, they received more out of the program than they put into the program. Okay. So, for example, in 2009, the loss ratio was 1.36 or 136%. So for every dollar the rancher put in, they got $1.36 back, right? So there's an economic benefit to that. 2011, right? For every dollar they put in, they got $2.36 back. So you can see there that Texas has a high loss ratio, several different years that were above 100% there. And again, this is the loss ratio, but we want to look at the farmer paid loss ratio. In a few slides, I'm going to show that to you where it's going to be greater than the loss ratio. Um, crop plans you should, so this is the fourth goal, crop plans that you should consider for your operation. I know I've been on some of these webinars and people have talked about PRF. They've talked about, some of the other programs and plans, excuse me, actual production history and revenue protection and yield protection. So I'm not going to go into all those details about some of those because they've already been discussed. But what I do want to mention is, these are the common crops grown in Indian country. And so what do your loss ratios stay? So what does your state, your county say about your particular crop? What does that loss ratio look like? Because again, that's going to help you to determine whether you should participate or may consider participating or not, right? Um, Maybe you just want to take the risk on yourself, and that's okay too. But we want to look at all those things. Whole farm revenue protection is gaining more and more momentum, and partly because the increased subsidies, increased coverage level. So now we have a 90% option, and at that 75% coverage level or lower, you get 80% subsidy. So the government's paying 80% of your premium. So what whole farm revenue protection does, it protects your entire revenue, your total revenue for your farm, your entire farm, all of your crops, not just one crop. And this includes livestock as well. So this is very good for diverse operations. Even if you have one crop, it might be beneficial. But again, you want to look at it. But the more crops you have, the more beneficial this could be. Um, so there's a revenue guarantee, and it's based on your 5-year average farm tax history. So that's why I mentioned earlier you would need to submit a Schedule F or a substitute Schedule F. So working with a tax, um, uh, a CPA or an accountant that is familiar with tax law and Indian country is going to be beneficial for you. With whole farm coverage, levels range from 50% to 90%. And so it's taking that revenue, and you can insure up to 90% of that revenue, or as low as 50% of that revenue, right? So the higher the coverage level, obviously the more premium, but there's more protection there too. So this pays for indemnities, right? It's a payment if your actual farm revenue falls below your insured revenue guarantee. So for simple math, let's just say you had a $1 million guarantee on your farm, and come next year, you had your yields were down or your price was down, market volatility, and so your actual revenue came in at 750,000. Well, there's a $250,000 gap. Well, then you would get an indemnity for $250,000, right? So essentially, that's how that works. So there's a lot of uh, upfront work that happens to get this policy set up. But once you do that very first year, after that, it's pretty smooth sailing. Um, but working with your crop agent who understands whole farm is critical, and then placing you with an approved insurance provider who understands whole farm is critical too, because it's very so there's a lot of detail that's involved in that. And so it protects against losses caused by natural weather events, right? Market price declines and then reduced production. So not only is it price decline, but it's also yields. So it's a great tool, a great program for entities. You can insure up to 17 million in insured revenue per entity. So I say per entity because we have some operations that have multiple entities, right? So they're growing very, very large vertically integrated operations. And so they're growing, you know, millions and millions of dollars of crops. And so they're trying to insure all of their crops. So they create multiple entities, and those are within the rules, or that's within the rules. And so they can insure up to 17 million per entity. And it's been helping them out tremendously. And there are premium discounts for more qualified commodities and underlying multi-peril crop insurance. MPCI stands for multi-peril crop insurance liability. So the more commodities you have, qualifying commodities, because there's a certain dollar amount threshold that you have to reach. And then if you have an underlying multi-peril policy, you can use that liability, and then that can give you some additional um, subsidy benefit. So that's a great plan. Here's a report generator from 2018 to 2025. I ran this, so you can look at far right. we can look at the policies, right? This is nationwide. Number of policies that were written in 2018, 2,500, then it went down to 22, then 20. So what was happening was, you know, producers were participating, but it wasn't paying as much, or the premiums were pretty high because the subsidies weren't as good. And then uh, just last year, right, the increased subsidy, and now with 2026 crop year, now we have a higher coverage level. So you're going to see more and more participation in these programs. Um, I will make a note right here that in 2025, we're not done with 2025 yet, right? We still have, um, people that are filing their taxes. So that number is going to grow. But the far right two columns, right, the loss ratio, again, that's the indemnities that received, so payments that went out, and that's divided by the total premium. But the farmer paid loss ratio, look how much higher that is. And again, this is nationwide, 400% in 2018, 2019, 500%, 2023, 700%, right? So for every dollar producers are putting in that year, they got $7 back. So it is working, right? When it's set up properly, structured properly, it does work. So that's whole farm revenue protection. And we can run this report generated for your particular state as well and county if we needed to, just to see what that looks like. Another program, pilot program, is supplemental coverage option, gaining more and more momentum and due to the increased subsidy as well. It used to be 65% last year now, or 2 years ago. Last year it came up to 80%. So it's at 80% subsidy here. It's an area-based crop insurance endorsement, so it goes on top of your underlying multi-peril crop insurance. And it's available with RP, which is revenue protection, YP, yield protection, or RP HPE, which is revenue protection, harvest price exclusion, right? So you can have an SCO endorsement on top of those. Um, Price loss coverage, so PLC, right through the FSA office. It used to be that you could not have both, but now you can. So you can have a PLC um, um, option and SCO. They're allowed together now. So this provides county level coverage above your producer's underlying multi-peril policy. So again, it's just different. You'll have your underlying takes care of your farm, right? Your yields, your production, and then this SCO is an additional layer, but it takes into account the entire area for that county, right? Um, some 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 areas it might take into account, 4 counties or 9 counties. It just depends, but for the most part, it's just one county. But it depends on the state and the county. So you want to talk to your crop agent on that, and you can run the historical coverage simulators on this to see how it's performed for you. It is triggered by county results, not your individual farm. So your individual farm might have great production, no issues, no losses, but then the area suffers a loss and you can get paid on this. I like to say if you're a above average farmer in your county, then you might want to consider SCO, right? And then the next slide will be, uh, or 2 slides will be ECO. You might want to consider these because if you have a loss, right, and you're a pretty good farmer, if you have a loss due to weather-related event or even price decline, if it's revenue protection, if you have a loss, then the area is probably going to suffer a loss too. So it might be a good idea to consider this. I mentioned earlier, it's 80% subsidized, right? The government's going to pay 4/5 of your premium there. We can look at the performance history, and then it covers that band. So from 86% down, right? So if you have an underlying multi-peril crop insurance policy that has a 70% coverage level, this will take you up to 86%. So that 16% coverage is looking at the area. So very good program. Here is the report generator. So 2018 to 2025. I ran this for this presentation. And so RP is revenue protection, YP is yield protection. So you'll see two lines for each of those years. Again, looking at the farmer paid loss ratio. So just go down the line. I don't see any year that is less than 100%. So what does that mean? It means that the farmer benefited more from this program than they put in. So 2025 is not done yet, right? So all of the revenue protection, all of the crops have to be harvested and accounted for. Production has to be accounted for in order to run the loss ratios on this. So we're still um, still waiting for all those production numbers for 2025 to come in, of course. So I'm guessing that that's going to be pretty high too. But again, not one year was lower than 100% for SEO from 2018 to 2024. ECO is just like SEO, but it's another layer. It can take you up to 90 or 95%. And so available with RP, right? Revenue protection, yield protection, revenue protection with harvest price exclusion. Provides that extra layer above your multi-peril, your underlying multi-peril. Same thing, triggered at the county. 80% subsidy. We can look at the history to see if it's performed well for you in your area. And again, it takes you up to 90 or 95%. So if you have that 70% underlying policy, right, and you had SEO, that's going to take you up to 86%. And then you wanted to add ECO, that's going to take you up to 95%. So you essentially have, 25% of area-based plans if you wanted to. Do you have to have SEO and ECO? No, right? Maybe you only want SEO. Maybe you only want ECO. So you can have an underlying policy at 70%. I didn't want to, I didn't want SEO, so you don't have to, but I want ECO, right? So you can add that. So it'll take you from that 86% up to 95 or 90% as well. So here is the report generator because this came out in 2021. Farmer paid loss ratio because it is higher coverage level, right? We still have some pretty good loss ratios. I guess in 21 and 22, revenue protection for ECO, those were under 100%, but all of the other years were above 100%. So still very, very good loss ratios for ECO. But again, it's a higher band of coverage. So with that higher band of coverage, there's additional premium, but 80% is covered by the government. So if it fits into your budget, I highly recommend it. Two new programs that I want to bring to your attention. And I think, a lot of producers on this call might be, down in some of these states, but the CLIP program, it's the Crop and Livestock Income Protection Program. They're just starting to roll this thing out. And so it's available for the 2026 crop year and only in 13 states. So you can see those there, kind of the middle of the country, and then heading east. So this provides, it's like an umbrella, right? It provides an umbrella layer of revenue protection that sits over your underlying RP policy. So you have to have at least two revenue protection policies on your plan, and this goes above that. So it's revenue protection taking you up to 85% is what that'll take you up to. So it combines adds a combined revenue coverage layer there on top. So you have to have two, like I mentioned, two revenue protection crops or policies in the same county. So maybe I have wheat and corn, right, in the same county, and I might want to add CLIP on top of this and take me up to 85%. So maybe my underlying is 70%, and I'm going to go add CLIP to my wheat and corn and take it up to 85%. So this combines one single coverage level that applies to all covered crops and eligible livestock. Right now, the only eligible livestock plan it works with is weaned calf. Um, so if you have LRP, livestock risk protection, this doesn't work for LRP. It'll work for weaned calf. Okay. It covers the same causes of loss as your revenue protection policy, so yield and price decline, adverse weather, of course. Um, and if all combined actual revenue from all CLIP covered policies falls below your CLIP guarantee, right, it will pay an indemnity to you, right? So it closes that gap after all of your revenue protection indemnities are paid. So it's a great plan. Um, Applies to spring planted revenue protection crops and wean calf. So you got some, corn, wheat, soybeans, beans. Um, you can have SCO, BCO on top of that. So, sorry, you can have a CLIP program, excuse me, on top of that. Forage revenue, right? So this is in the development stages. We thought this would be rolled out this year, um, but it hasn't been announced yet, but it's still in the development stages. So it's being developed by AgriLogic Consulting, even CLIP, the program I just described or explained, that's being developed by AgriLogic Consulting as well. So this is designed to provide revenue protection specifically for forage producers, right? Our forage producers have been, left out for a long time. I think, PRF, there's some forage production policies available out there, um, some annual forage, again, not available in every state, every county, but historically our forage producers have been left out. So this from revenue protection, right? So this is going to be very, very helpful to those operations, as forage is one of the largest acreage uses in the U.S. Um, so producers have lacked a revenue-based protection plan, unlike your wheat, your corn, soybeans, right? Your major commodities. So this is going to be very, very beneficial. Um, Big concern among forage producers are the impacts on quality due to weather. As I mentioned earlier before, right? You get a great hay crop, and then rain comes, so now my quality is down, right? So I got to sell that at a discounted rate, and well, that's going to hurt their budgets, right? Hurt their pockets, and so um, what can we do for that? Well, there could be forage revenue. That's the solution. Or, right, there's whole farm revenue that can help protect against that as well, right? So if you're a hay producer operation, you may want to look at whole farm revenue because that's available. That works. Forage revenue will be rolled out, whenever it's rolled out. Uh, and so this might be, beneficial for you later on down the road. But if you're looking for a solution, then maybe whole farm revenue protection might be the best solution for you right now to protect against that if you're a hay operator. Um, so that's forage revenue. We're excited for that one to come out. Um, Last couple of slides, right? Or last one, I think. Your operation, every operation is different. It's unique. Um, it's our job to get to understand it, to get to know it. And you're in a different state, different county, right? So different rules, different prices. So consult with your trusted crop agent. Um, your operation has different goals, um, different needs, trying to grow, you know. So how do we help with that? Your crop agent hopefully can help guide you in that direction. I think you want to keep an advisory team around you, and that should include your crop agent. Um, your risk management strategies might be different than others, so utilizing your trusted crop agent to help with that, identify that is important. And then again, talking with them because you may qualify for some additional benefits. Um, and the slide with all those questions, right? We're only as good as the information that we're given. Sometimes our producers don't tell us everything until later on or in a conversation, and so sometimes we may not ask or um, get that information early on. But it's you want to be in close communication talk to your agent, ask a bunch of questions, um, so that you can be in the best situation to continue farming and operating, um, for years to come. That's what we want. We need food, um, and we need you to keep farming. So, um, lastly, here's my contact information. If anybody needs to get a hold of me for any reason, you want to, just have a conversation about it. You want to, want me to run some options for you, or you want a copy of this slide. I think Ridge has a copy of it, of this presentation, so he's more than happy to share that with you guys. I want to be, uh, as I mentioned in one of the first slides, right? I'm an ally, and I want to help. Right? Any way I can help, let me know. Happy to do so. That's all I got,
Uh,
Ridge.
awesome. Thank you so much, Jamie. If anybody has any questions, feel free to send them in the chat or email Jamie or myself. I'm going to put my contact information in the chat box right now. And we'll also send out a video recording of this presentation, so you'll have it on hand if you want to review any pieces of it. And then finally, I just want to share with all of y'all a slide for our Distressed Borrower Assistance Network grant that we've received. If you or a farmer or rancher that you know is in a tough situation with a farm loan, if you're looking at potential things like foreclosure or a loan acceleration, or really anything that kind of details financial readiness, please reach out to us. It's something that we'd love to help you out with, and just kind of brainstorm what might work best for your operation. Otherwise, I will let everybody go. Thank you again, Jamie, for presenting today. We really appreciate it, and we hope to see you again on another one of these.
My pleasure, Ridge. Thank you so much.
Y'all have a great day.
You too.